what is going on in the real estate market right now in the Treasure Valley. We have a lot of intermittent investor activity. It's been this way recently and somewhat so all year. Investors have exhibited signs of uncertainty to the point where the Boise Investment Properties team at Swope Investment Properties, who specializes in residential income, we have done more owner-occupied focused deals this year than ever before, and possibly even more owner-occupied deals than investor deals. The market has a response to elections always, and it views the incoming administration as inflationary. So despite what we're hearing about the Fed lowering rates, mortgage rates are steadily high. And this is likely until we see signs of an economic weakness. And these higher interest rates absolutely impact buying power, affordability, and demand. So what can buyers do with this information? They can lock their rates now because things are a little bit uncertain prior to pending inflation data and take advantage of that. Sellers who price right may not necessarily benefit from waiting to sell, but the operative word is pricing right in this particular market. And as you'll hear, the rental market has cooled seasonally and after years of increases during Idaho's COVID population injection. That's the overall climate of what's going on in our real estate market. Let's look at it. This information, the inflation information, came from this lender who I've not actually done business with, but he had such amazing information in the package that he put together that I wanted to share it with you. And so he's saying that investors are expecting higher growth, higher inflation, and larger deficits. Oh, this is actually Mike Frantoni of the Mortgage Bankers Association who says this. But bottom line is, results will remain in a fairly narrow range over the year. So they're not necessarily going to come back down. The winter buying season brings less competition and oftentimes more negotiating power. However, as these things hit the market, we'll see what happens and how buyers respond. This is a very complex slide of the inventory. Let's see, we've got the years are in weird orders, but the months are in normal order. And this is inventory where low is low and high is high. Oops. So, sorry. Okay. Inventory existed until about 2020. We had high inventory. And then you can see in 2020, it went down. It literally just crept on down, and we went into that supply and demand thing that we talked about basically since 2020 until 2023. That was the name of the game, supply and demand. And then inventory tanked in 2021, but then it grew a lot in 2024. In fact, 27% more than last year it grew. And then I should probably point there. So obviously inventory reflects the laws of supply and demand. And this is a national slide. This is what's going on nationally. So inventory was normal, then it was very low through the COVID eras, and now it's kind of creeping back up. Enter price reductions. So how many sellers are giving up concessions to buyers right now? How strong and confident are buyers? How much negotiating power do sellers have? So what you'll see is negotiating power among buyers was pretty much NA in 2022 until about late spring, which is kind of a weird time for sellers to suddenly lose the upper hand. Spring is usually a very thriving time in the real estate market. But in spring, all of a sudden, we saw buyer negotiations starting to spike. The market was literally moving underneath our feet fairly dramatically. We often see more negotiations starting in late summer, fall, this time of year. And how we're responding to this data is we're going for as-is sales right now. versus banking on the multiple offers, even if we have a compelling price. We'd still like multiple offers, and they can still potentially exist. But for example, that fourplex that we talked about on Farwell, that was a darn good price. And we didn't get investors bid it up over 800,000, but we did put the as is in the bag. And if you've got all original everything on 4 units, what's our imaginary number per unit? You're going to spend some money. Let's just make up 10K per unit. That's 40,000. So if this deal goes through at an 840 that's the equivalent of an 840 sale price because it's as is in some ways. So the market is moving beneath our feet. A lot of you have been coming here a lot. You always know what's going on in the market, and it's changing to a point where it's starting to surprise us. We're seeing some seller sticker shock when the prices that we're expecting, us included, aren't flying right now. When people bought something in 2021, 2022, like that network townhome, and we just can't sell it at a profit for them, we can barely sell it at the price they paid for it back then right now. That's in some cases. And that's why that guy's holding a little longer as we recommended. So it's a time of change. What does Dave Rusk say at Idaho Central Credit Union? Rusk's rate update says, Rusk says the best indicator of what mortgage rates are doing is the 10-year treasury yield. So he gives us the picture of the 10-year treasury yield showing the trend line in mortgages. And where we're at now is around the 7% mark. And here's a zooming in of the more recent times, August through November, where you'll see that rates are just about 7% again. And they went down a little bit here right before the announcement that they were going to go down. The rates dropped sort of predictably, and now they're back up. And this is specifically what they look like. So 30-year fixed, 20% down, single family home, owner occupied, 6.875. So almost 7%. This brings the ARM promotions back. The 5-year ARMs are back because that is a 5.59% rate. And that's just enough of an incentive that people might jump onto it. Investment rates, and these are about a 0.5 percentage point higher than what I presented to you last month, guys. Investment rates are incentivizing a higher down payment because, well, gosh, if you put 40% down, you're going to match that single family home rate. And you kind of got to put 40% down anyway if you're wanting not to reach in your pocket every month because of where prices and rates are putting cash flow. So the market is heading in the opposite direction from what most people think right now, because we hear news of the Fed and something going down, but that doesn't necessarily mean mortgage rates are going down. So how does this translate into what is your home worth? If you own a home in Canyon County, or if you want to own a home in Canyon County, what's going on over there? Well, the median price is around $424,000. And as you would expect, it's higher, maybe somewhere close to $450 for $445, something like that for brand new homes, and a little bit less for existing homes, right? Right. This is still September data because we had AVID a week earlier, and October data isn't even out yet. Days on market are up, inventory is way up, affecting those laws of supply and demand. What about Ada County? Well, here's what's interesting. That median price of homes around $535,000 is like 500, it's like more, like by 3 and some nominal amount for existing homes. And it's about the same for new builds. So there was just no discrepancy when I ran the numbers between existing inventory, brand new construction, and the overall median. It's just all right there at that number. Again, days on market is up, inventory is way up, the number of homes sold is also up. Surprisingly, in some ways, but maybe that's just because our business decreased this past year. But then again, we've always positioned ourselves as a resource for investors, even though we do both, and our investor business was not as thriving as it usually is. It was our owner occupiers who were using us this past year because of that investor uncertainty. Okay, so duplexes and fourplexes, this is Ada and Canyon. Inventory, slight increase over the month, especially in Ada duplexes. Pending deals also increased a little bit, not too much, but a slight increase in all categories. And then, except for Ada County fourplexes, which dropped. And then sales decreased, which we had predicted because of what inventory we had going on. So the absorption is scattered, with it being really fast and really moderate is where our market absorption is in these. And if you're using this to sell, price is really the name of the game, and it's really what's going to make a difference on your days on market, and also just whether you'll sell at all, as I'll show you in a minute here. So Tony Drost's data, or Drost's ADA data, as I like to call it lately. Average price on fourplexes is down, and it went down to $815,000, and this is only in Ada County, surprisingly. Days on market, properties are selling quickly, so investors are still recognizing, I'm not sure, a good deal when they spot it. We all know that 800,000 is a good deal. Is that going to become the new norm? And is it, is now a better time to sell than waiting because of that? I'm not sure, honestly. That's getting into the crystal ball zone. But in any event, investors are saying, hey, this is a good price. I've seen higher. I'm going to snap it up. And they're not letting it sit on the market unless it's priced meh, just okay. Gross rent multiplier keeps going down, which is better for buyers. That's, of course, the rent to purchase price ratio. And cap rates are the highest since January 2020. So that's interesting, isn't it? So let's talk about cap rates. The trailing 6-month average on cap rates is something we look at to predict trends. Tony's been analyzing this forever, and it has very smoothly increased into the 5% range. And that's what it looks like if we do a close-up on more recent times, that you can see that trend line is a somewhat smooth increase in cap rates. And Tony likes that it's a smooth trend line, and reminds us that price drives caps and vice versa. Cap rates drive your price if you're an investor. And we're seeing prices coming down, and it's shown itself as the head of a new trend. How big's the body? Don't know. That's crystal ball territory. So the price per square foot of rents has remained fairly stable based on the listings we're seeing. And so there's two things that affect a cap rate. It's a couple things. I mean, your NOI, but your rents are going to really drive your cap rate, and so is your price. And the rents have been fairly stable. So we're really seeing price is the driving factor in those cap rates increasing. Because we know expenses aren't going down, that's for sure. So the rent price per square foot steadily increased till about 2023's decrease. And then the new trailing average on rents price per square foot has been fairly stable. And this is what your average price of fourplex looks like. And this line just kind of draws a line across. And so you can see, with expecting a slight increase, there's a lot more stuff going on below the line over here. And obviously the $815,000 average price per fourplex is pretty significantly lower than $844,000, which it was the month before. And that had been the second lowest for the year. Now it's the third. So what is happening, like I said, is investors are responding. So cap rates are going up, prices are coming down, and investors are saying, finally, give me something to buy. And we're seeing a decrease in days on market. So that is proving to be the incentive, the price. So in September, properties were on the market for an average of 3 months, showing market intolerance for some of its pricing. In October, the prices responded to price drops. I mean, prices responded to the high days on market, bringing the days on market down. And investors are recognizing a decent deal. So this is what it looks like, boots on the ground, what's active right now in Ada. So we've got 5 fourplexes active. Lucky Lane just did a price decrease. It's been up there for 61 days, and that's not even true. It's been up there way more than that, but you can do some things to reset days on market, like pop it off the market for 31 days. So Lucky Lane has been up there for a while, finally did a price decrease. And so they gave up on waiting to get their price. And that's always an uncomfortable situation when you have a seller who sees our comp, because we sold that Lucky Lane property last year, was it last year? For $930 something thousand. And so they're like, we'll take 938, and they're just not getting it right now. It's a different market. And then here's what has been sold since 10/1. What is selling? We've had one pending and one goes sold. So ours went pending, we priced it right. And one sold at 8:30 in Ada. Canyon County fourplexes, we've got a handful active, and you can see the activity. I had to go back to September to find any other activity, and we had basically 4 go pending in Canyon County on Bella. They're 2018 builds, and they went pending for $850,000 each. It's a decent price. And then another one was canceled at $800,000. So interesting data. It's interesting what we're seeing. And then our 5+, remember through the whole COVID era, I'd be like, yeah, Boise has Idaho has more 4plexes than other areas. We just don't have as many 5+. And I kept saying that because there was just nothing to show in 5+. Well, that inventory is not priced more compellingly than a 4plex. The 4plex sort of sets the expectations. And since they're more rare, they price it kind of like 4plexes, but you're not getting that buying power to buy more. And so investors aren't responding. They're just racking up. They're just sitting there on the market. We have them now. In short, we have them now. We didn't for a while. And then we had one get canceled and one pending and one sell since maybe October or September. All right, that's our market update. Any questions on that? If not, we'll cruise right into the rental market and then party. All right. Thank you. Okay, well, Danielle is going to tell us about the rental market still. And I have one slide here from First Rate Property Management, and I apologize. I think that they may have, my email is being like tech supported today. So if you email me today, it's possible I won't get it till tomorrow. But in any event, Melissa did update some stuff. But last month, she was really giving us tips on how to deal with the market. And it was, we must show well, we must utilize all the marketing channels, move-in incentives. This month, First Rate was saying they're working. They're just doing little incentives, but they're working. And they're not seeing further declines in their rent prices. Their rent prices are fairly stable. And if they're increasing them, it's just a little bit. And so just really staying proactive on your rent price setting and watching the market and running your comps. But we don't have to hear about the rental market. We can hear about it directly from Danielle Costa, who is an agent with Swope Investment Properties on the Boise Investment Properties team. And she also works part-time at Urban Edge Property Management. So she can answer any questions directly that you may have. Danielle Costa for the rental market recap.
Thank you. Okay, this month, even the last week, has just been extremely weird. We were maybe getting 1-2 applications every few days, and on Thursday I had 9. So it's all over the place with renting. Was slow, and now it's picking back up. It's gotten quite a bit busier, so I'm sure that you guys will see that. Renewals have been pretty steady this month. I think we maybe had 2 people buy out of their leads. Everybody else renewed. So as long as you're shopping your comps, keeping renewals low, and really focusing on the retention, the relationships with your tenants, you're going to be golden. We have been talking about concessions, and a little bit is going a long way. So for example, we took over this property and it was a mess. There was 8 vacancies. We offered $150 and that was it. All of them were leased within a month. So you don't have to go these big 1 month free $500 off. Start slow and see what happens and then adjust from there. Give it a couple days, a week, and adjust accordingly. You don't have to, yes.
You know, what are the rents kind of in that property we rented?
14s? Like 13, 1400? 2-bedroom, 2-bath. Yep. Yep, and those are in Meridian off Locust Grove. So, yeah, and part of this, which we'll go to the next tab, month-to-month leases. I know that that is scary to a lot of people, but sometimes they can be used to your advantage. And that is what we ended up doing for that property that we acquired that had a lot of vacancy, is there was still a lot of month-to-months that didn't want to renew. But we were like, let's give it time. I'll allow you to stay month-to-month. So that way we weren't having more vacancies. So even though they can be scary, you can also use month-to-month leases to your advantage as well. Short-term gets you into the right timing. We also have seen, I don't know if any of you guys have seen it, and I guess this is a question, is how many of you have had quite a bit of denials due to credit? We have had the most denials this month due to credit since the 10 years that I've been in this industry. And a lot of it, I don't know, our system is coming up a lot lower than Credit Karma by almost 100 points. So that's something to also look into. It is investigate why their credit is showing what it is. Yes,
What's the standard that you use?
we require 650. Yeah, on some of our lower properties, we'll go as low as 600. But we like to, well, for one example, I had somebody that showed me her Credit Karma, this one car payment, her credit went down over 100 points in 1 month. And it was just because her car was totaled and it hadn't aligned with the bank yet. So something, if it's popping up bad credit, maybe look into it, have the conversations, obviously fair housing, but sometimes there's reasoning why their credit is pulling the way that it is. And
Danielle,
yes,
can your prospective tenants buy themselves out of bad credit with, say, a cosigner or additional down payment?
so depending on the score, yes, additional down payment. We do not accept cosigners for bad credits,
Okay.
only income or not having a lot of rental history. But also, they do have to meet the credit guidelines if they're applying to be the guarantor just for signers as well. And then lastly, where are we at? We are seeing that because home affordability is on the more difficult end, we are seeing a lot more long-term rentals. So what we started at our property management company aligned with Swope is that I'm actually putting aside money to help people get into their first-time home buyers. And some of these are saying, I want to start, but I don't want to buy for 2 years. So we are seeing a lot more long-term renting conversations. And that's about it. I don't think we've talked about it here, but I also want to let all of you guys know that by being a part of AVID, by being involved with Swope and Boise Investment Properties, Urban Edge does have a lesser management fee for everyone that is aligned with us. So, let's talk afterwards. Like if you guys want to have the conversation, I have a nice flyer with me, but yeah, without further about it.
And Danielle's cards are up here as well.
Yes.
As are ours. Will you do, Danielle, for us? You know how I love my in summaries, but we don't have
Yes.
a feature presentation. Will you do an in summary, like, so? Like,
Thank you all for listening to our market
No,
update.
not that one. Sorry,
Which one?
sorry.
No,
No, such.
oh my gosh.
No, the rental market, like, so like in 2 sentences, what is this rental market doing? And maybe look toward Leslie.
It's crazy. It's changing every day. You just have to adjust to what's happening. Don't be afraid to make changes and really just shop your comps and look at what the market's doing.
Danielle Costa's rental market recap.